I'm going to start with you, Colin. I mean, that was a pretty bold suggestion from Ron Barron that this company, in which he has a large stake of more than $1 billion, so he's a fan. He thinks this company can go to $1 trillion in revenue in a decade. Do you see that as a possibility?
You know, it's pretty aggressive, and it's a little bit early to tell. But what we do know is that they've been able to take double-digit market share in the premium market for vehicles, and so the possibility for them to take 10% or 12% market share in the overall auto market is totally feasible at this point. And then when you start translating that into revenue, I think he's a little bit high in where the price point would be to translate into those sorts of revenue numbers. But the earnings power is very substantial, and there's a lot of sensitivity towards upside on margins there that we think can translate into some, appreciation on the shares from here.
If you go back, Phil, to October, September of last year, you would not say that Tesla was a rocket ship of a stock.
Not at all.
It was okay.
So the question becomes, what changed?
What changed, and what has driven it up,
There's not one singular catalyst, but a couple of things have changed. One, they got the China plant up and running faster than expected. And that was the first time that I noticed a sea change in terms of people in the past say, oh, yeah, Tesla, Musk, and what he's doing. Oh, wait a second. Now there are serious questions about they can achieve what they set out to do. On top of that, there has been this shift. And Adam Jonas was talking about this earlier today towards ESG responsible investing. And if you believe in that, and if you believe that you want a company to play that market, Tesla is a smart play in that area. Those are a couple of the catalysts that are there.
The only irony that still strikes me is how much of Tesla's electric power comes from a coal-fired grid.
Kelly, that doesn't hold any water with anybody. I've brought that up to people, and their response is, so what's the deal? Someday you're gonna pay the price one way or the other. You're gonna pay the price at the pump in terms of pollution, or you're gonna pay the price in terms of a grid with coal-fired power plants.
You had BlackRock come out with this big announcement that said, we are now going to be climate first. We're going to divest from thermal coal. But, but it still plays a role in powering 20% or so of the whole grid.
Sure.
Now, that day is everyone wants that day to come when it's wind and solar. And Tesla plays an important role there. And I wonder, we're talking about it like an auto company now, but the complete vision for Tesla looks much more like an energy company. Mike said earlier, maybe even a software company. Is that right?
All of those things. And Colin can talk to this. I mean, the fact that whether you look at battery storage, energy generation, the solar roofs, if that business ever takes off, and then you add in a software component. I mean, Colin, let me throw that question to you. When you look at Tesla 10 years down the road, what do you see?
So at core, there's really incredible battery technology within the organization, and that's material science that they've been working on for well over a decade. We think they have some substantial advantages on that. And as we look at what's happening in terms of integration for solar and wind, and taking share on the replacement cycle that's happening within the power sector, we're looking at 60 to 70% of new power is renewables at this point, and that becomes enabled by batteries to really go to 100% of new power over the course of time. And so seeing something like half of our power come from renewables over the next 20 to 25 years is absolutely achievable, and it's going to be enabled by battery technology, and Tesla can play a very important role in that.
So you just raised your price target. Remind me at where it stands right now.
I'm at 684 right now, and
you're at
it's a challenging situation, right? I mean, we went to a disruptive technology company multiple at 30 times. We're looking at 2024 earnings of nearly $30. When we look at 1 point of gross margin improvement for them, that translates into about $3 of earnings for us. So if we're off by a couple points on the gross margin line, we can move the stock $90 to $180 very, very quickly, just in terms of some execution on the gross margin side. And I think that's what people are looking at right now, is just how much fidelity is there in this business model, and what do you pay for it?
Colin, quickly, does the sharp move higher make you more cautious at all? Just wondering, look, it obviously can't go up like this forever.
Clearly no, but the question is, when does it turn, and what do you look at in terms of the trading dynamics? And right now, the move is clearly higher. What we're not seeing are the classic indicators of, sell-off in the morning or a buy in the morning and a sell-off in the afternoon. We're not seeing that to see the stabilization on the stock. So we think the momentum is still moving higher here, and we're looking for those signals on the trading desk to signal a stabilization.
Sure. Today being another example, Tesla's at 927, only crossed above 900 a few hours ago.